We start the market talk. Trade the market, not the forecast. This is the basic issue, and a lot of people would have lost money last week who had gone long and then the market corrected and all that. Because successful trading is about risk management, market observation, and not about forecasting. Remove opinion and go with the flow. Go with the trend. Don't try to go against the trend. Okay, the setup as I see it: Fed meet, interim budget, corporate results, RBI's Paytm bombshell. This week has been full of feverish excitement. Now, Indian markets came out of it with flying colors for both stocks and bonds. They had an excellent week. US markets are now pricing in a delay in the rate cut to the May meeting. What happened in the Fed meet was Powell said that inflation was slowing and it was just a matter of time before they cut rates. But he said that the situation is not right now to cut the rates in the month of March. So what has happened is the case for soft landing has got stronger and Fed is in no hurry to cut rates. The last reading of PCE index, that is personal consumption expenditure index, which they follow instead of a CPI, was below 3% and it is likely to head to around 2%, which is their targeted rate. So but the other issue is large part of this inflation is attributed to decline in commodity and energy prices and not to the contraction of economic activity. So if you see the latest data, US economic data remains solid. GDP growth was 3.3% in the last quarter. And because of that, there is no urgency to cut rate because people only look to cut rate in case the economy is slowing. The latest IMF World Economic Outlook has also upgraded the global growth forecast to 3.1% for 2024. So there is no reason to be worried about anything for them. India's manufacturing PMI for January came in at 4-month high of 56.5, signifying a strong expansion from the previous month. So it shows that there is a confidence in futures. People are getting orders. People are executing. There is a order backlog. So people are confident about future growth. So that is good for the manufacturing sector. The confidence in the performance of the Indian economy was reflected in the interim budget. Budget basically negated the fears of populist giveaways before elections, which everybody was thinking of, and because of that, a lot of FMCG stocks were flying. Slashing of fiscal deficit sent a message that this is a responsible conservative government. It will lower interest rates, attract long-term foreign funds, basically in debt instruments. It will focus on manufacturing, infrastructure, etc., so that people do not get freebies, but then they get income by working and earning salaries. So, but the other focus is that they expect now the private sector to step up and deliver on uh, increasing capacity, doing capex, etc. Now, the end result I will show you subsequently. The bond markets were euphoric as expectations are that in case the fiscal deficit is under control and as part of inclusion in the global bond indices, foreign fund inflows will take place. uh, Budget capex for FY25 is approximately 11% higher than the budgeted capex for FY24, but it is 16.9% higher than the RE for FY24 because I think the Indian government has not been able to spend what was budgeted in for FY24. So what happened was in response to lower than expected borrowing plans, the bond yields dropped. And since inflation is likely to be contained within the RBI's mandated range, there is a big possibility that in the RBI MPC meet, which is going to be next week, uh, they may influence their stance that it may become more accommodative, and they would talk about lowering the borrowing cost. So because the rate cuts are now becoming as to when it will take place, not if they will take place. So it will help RBI to move towards the dovish pivot later this year. And the lower expected borrowing from the governments will also influence the central bank's policy stance, because if the government is going to be borrowing less, there is going to be more money available for the other corporates and public. Now, talking about certain stocks which were in news, first is Concor. Management expects to sustain the ongoing business momentum and has maintained the FY24 revenue growth guidance of 8 to 10%. The export-import volumes grew 8% in Q3, and they have planned for a 8,000 crore of capex to support growth. They have surrendered some land parcels, terminals, etc., to reduce their cost base and aid expansion in operating margins. Land license fees has been reduced from 72 crore to 85 crore sequentially. Commissioning of Western dedicated freight corridor should drive additional volumes and reduce costs due to double stack movement. That is the railway thing. They are making investment to upgrade new rakes, containers, and other handling equipment. Now, here the FY25 expected EPS is around 22-23, and stock is already at 38 to 40 times and looks expensive. I'll just show you the chart. This is a thing. So if you see this week, this is a daily chart. This week, Concor went up. It was at 50 EMA, around 840 odd, and from there, for in 5 sessions, it went to around 925 plus, and then has corrected to around 925. I think it is expensive. It has to correct to lower levels so that you can buy it and all. RSI is also, it's okay, around 62, so it is in momentum. The other stock which is looking good is Craftsman Automation. Wider use of aluminum in vehicles augurs well, and it has now got reasonable valuation. For Craftsman, the aluminum products segment is experiencing robust growth. It's a leading player in machining cylinder blocks and cylinder heads within the commercial vehicle segment and construction equipment category. Q3 EBITDA margins declined by around 322 basis points, but net revenue was up 50% year on year. Aluminium die casting business is on an upward trend due to anticipated rise in aluminium usage per vehicles. As more and more electric vehicles are coming, people want the vehicles to be lighter and sturdier. Powertrain business was weak. Industrial and engineering segment had 16% year on year growth. Now, FY25 expected EPS is 225. So at around 19p, it is looking inexpensive. Craftsman acquired DR Axiom India, a specialized manufacturer of aluminum cylinder heads through gravity and low pressure die casting for personal vehicles. So that is also going to add to their revenue and profits. So I'll just show you the chart. Craftsman Automation, it has dipped below the 200 EMA, and in my opinion, this range from 4250 to 4000 is a very big buying opportunity. Though it has come down with large volumes, and now RSI is oversold. So that is the thing to be kept in mind. The other disaster or accident of this week was Paytm. Financial performance has surely improved in the recent years, but that does not seem to be the case with corporate governance standards. And it started with the Paytm Payments Bank being barred from offering incremental banking services effective 1st March. But now more and more news is coming out, and more issues are emerging. Earlier, also in March 22, RBI had barred Paytm Payments Bank from onboarding new customers. So it has been nearly 2 years, and they have done nothing about it. Instead of working to get themselves out of that restriction, they have done nothing. So latest RBI action puts an end to the banking license stream. There has been selling by pre-IPO investors, and its operating performance though has improved due to pivot from payment business to lending business, actually, because payment business was a low margin business. It has been posting operating profit excluding of ESOPs cost for 5 consecutive quarters. But ESOP cost is another story. Uh, ESOP cost, as I told last week also, will remain at 1500 to 1600 crore for next 3 to 4 years. Hence, it will continue to show losses overall. Now, the interesting part is 70% of the ESOP given to Vijay Shekhar Sharma at an exercise price of rupees 9 per share. And just to revise, IPO came at 2150. So this is the basic problem because this is what is causing losses. And interestingly, after they came up with an IPO in November oblique December 21, they did a buyback at 810 in December 22 after 1 year. So through open market and not by tender offer also. So they have done that buyback, and right now this stock is not in a good position, and I think they have revised now the circuit at 10%, so it will just keep degrading from there. Auto sales in January 24 showed a mixed trend. Entry level bikes, cars, premium bikes did well. Commercial vehicles declined. Tractors declined year on year. Pas- uh, Passengers showed preference for mid to high range utility vehicles. So Mahindra and Mahindra and Maruti had robust sales. Three wheeler demand is flat to negative. Now we will see certain technical aspects. So if you see, this is the US 10-year bond yields. This is a daily chart. Now it was correcting. It went down to around 3.8 from a level of 4.2 this week. And then on Friday, after the jobs report, it went up and tested the 20 EMA at 4. So it has suddenly moved up now because the jobs report was strong, and so the chances of rate cuts were reduced, and number of rate cuts in this year also has been reduced. The Brent crude, again, this is a weekly chart. Now last week it went up, and this week it corrected. But the point is that the lower level is around 70, which it will not go down much from there unless there is a major demand destruction. But if the economic factor or economic outlook is strong, there is going to be decent demand. But it is a declining trend line, so the prices are declining over time. Dollar index, this is a weekly chart, went up again basically because the expectations are of a delay in rate cuts. So the dollar strengthened against all currencies, also based on the strength of the US economy also. Gold, it is still at the same at 20 EMA. This is a weekly chart, so it is around that 20 EMA level and keeps bouncing to that 2070 level and comes back. So for it to go up, the dollar has to decline drastically. This is Nasdaq. Now Nasdaq has broken out. So if you see here, it has broken out here on the weekly chart. It had a fabulous week, and now it is at all-time high. It made that cup and then handle, and then it has broken out from there. So and it on that handle thing, it took support at its 50 EMA, and then it has gone up from there. uh, so on Friday it was up 1.7%. Facebook, that is Meta, was up 20% because they had announced dividend and 50 billion share buyback. Amazon was up 7.9% on good Q4 earnings. January jobs report is better than expected. So US economy added roughly 3,53,000 jobs versus estimate of 1,85,000. Wages expanded by 4.5% year on year versus 4.1%. So they are taking into account that the economy is strong, so the earnings will also be strong. So the despite rate cuts are not happening, the US markets are going up. This is India's 10-year yield. So if you see, this is a weekly chart. Now from around 7.1, 7.2 levels, it came down to around 7 uh, on the budget day. Basically because the government is going to reduce their borrowing, so that it helped them. And that is the thing which has pushed all PSU banks higher, because they have major holdings in government securities. Now, this is the Nifty chart. Uh, if you see here, this is a weekly chart. Now, last week was green, and but overall, if you see the weekly chart, Nifty has been making higher highs and higher bottoms, so it remains positive. And the more interesting things will come out in the daily chart. Now, daily chart, if you see here, uh, this was the swing low it Nifty made at around 21 140 odd. So which is very close to the second swing low it had made around 21,000. So this area should provide support, and it went up and it tested the last all-time high of 22124 to 22126 now. But then after that it corrected and it made a, so if you see this, this is a inverted hammer or a shooting star. What it basically indicates is that all the buying was sold off, and it so the wick was very sorry, the head of the candle was at the lowest part, shows loss of control from bulls at highs, and follow up of this candle will determine the trend from here. So you can't just say that it is going to be bearish or something like that. Let's see how it follows up from there. Till the time Nifty is above the 20 and 50 EMA, it is going to remain strong. So that should not be a problem here. Now, this is Reliance. This is the weekly chart. So if you see, it has finally had a breakout above its previous all-time highs, and it has clearly broken above that and seems to be heading towards the 3,000 level. Now, if you see, there was you can't really take the technical so strongly here, because if you see this there was a kind of a cup and handle here, it has broken out, but it was also formed earlier, but that breakout failed. So one has to be careful, and here the RSI is at around 76 now, so it is in momentum. Above 80 it will become oversold, so let's see. This is the other one which is in momentum, the Adani group. Now, if you would remember, this is a weekly chart. So in 2023, it had a big dip and it went down to around 1,000 odd level, but then it has taken off from there. And in December onwards, it has been on a high. And now the results are also good. So it is doing well. The 20 EMA has crossed the 50 EMA. So that's a golden crossover. So this should do well. And in case you are here, you must remain invested with Adani Enterprise. This is Nifty Bank. Now, Nifty Bank, if you see, was oversold previous week. It was oversold and it had made two big red candles, and it was really testing the 50 EMA on the weekly chart, and it had gone to around 44,000 odd level. But post that, we saw a 2,000 point rally in Nifty Bank last week, uh, where PSU banks did a lot better. Uh, but at the end of the day, the Nifty Bank fared much worse, because there was a sell-off on the second in the second half of Friday, with all the major private banks corrected. Uh, Now, let's see the daily chart. Now, if you see here, this was the high it had made around 48,500 plus, and this was the bottom it had made at around 48,0782. So it had retraced roughly 67% of the retracement level, but then it has bounced back from there. This is a daily chart. So last week it bounced back, went nearly to 46 700 800 levels, and then has corrected and made a big red candle. So it will be interesting to see how it works here, uh, because we should be, instead of looking at higher levels right now, I feel that we should be more concerned about lower levels so as to protect the gains we have made till now. This is HDFC Bank. This is the weakest part, and it is at on the weekly charts also. If you see, it is at 200 EMA. So this is the crucial levels. If it breaks here, then it will go and test that 1360 or go below 1400 and test the 1360 level. It is having very high volumes for the last 3 weeks. So this is one weaker part of the market. ICICI Bank, this is again a weekly chart. It tried to take out its all-time high of around 1050, but it failed again on Friday, and it's kind of a doji now here, so it can go any direction. Support on the weekly chart is at around 980, and I think 1000 level is crucial for this to see. Below 1000, it will become bearish. The stock which is showing some strength is Kotak Bank, and it had done nothing over the last 2 3 years. There was a declining trend line. So if it breaks this 1900 odd levels, then it will become very bullish. And we have to watch the RSI also, because it is at around 51. So if above 60, it will become bullish. The sector which performed well last week was the PSU banks. It has a clear breakout. It was in the trend of along the 20 EMA, but now it has had a clear breakout. And this was basically because of good results, where their balance sheets have improved, their ROEs are higher, their profits are good, their assets quality is better. Plus, now with the bond yields coming down, it will help their earnings. Uh, this is SBI. It went up to around 660 level, but it corrected on Friday. Now results are in between only. Nothing great about it. So let's see what happens to it. This thing, but this level of around 640 odd would be crucial to see. 630 to 640 would be crucial to see, because generally it corrects from this level, takes support at 20 EMA and then bounces back. So let's see what happens here. The stock which performed very well last week was PNB. Basically, it is because of good results and low valuations and a lot of investor interest now, but these are now overbought, grossly overbought. RSI is at around 88, and it had a big green candle last week. So be cautious now. Now there is no need to chase these stocks. Better to book some profits. This is the PSA index. It also did well. Uh, and it is, if you see, it had a good Friday trade, and it has touched the level of 9,000 odd levels. And if you see here, this was at around 4,500 levels in March, April last year. So it has nearly doubled in less than a year. Now this is NTPC. It has gone to all-time high, and it has made a, cup and handle now, and it has gone to all-time high. RSI is in momentum now, so it should do well from here. We had covered this stock earlier also. This is Coal India, again overbought, but it has made again a fresh all-time high. It broke out in August September last year. From the generally the range, it was moving around 20 EMA, and after that it has been very positive. It is a play on power requirements of the country. So in case you are here, just remain invested in these stocks. The sector which was in focus last week was the OMCs. So the BPCL, this is just BPCL here. It had a solid green candle, and roughly from around 470 odd, it has reached to around 560, 570 level. So 100 rupees movement in 1 week only. But now it is again overbought. So don't have to chase this. But there is a lot of value here, because the P's of all the three OMCs are still below 10. So this is where the people are finding value. uh, where people have already realized value and are now booking profits is IRFC. So if you see, last 2 weeks have been red. It went up to 185 or 190 levels, and has now corrected and will give back. It is still, if you see the chart, it is still overbought. So it has to correct slightly more for value to be generated. The other thing which is not very clear out here is that most of the support to the railway sector is going to come from the budget only. So what money they are going to raise is doubtful. So how they will raise money and what funding they will do, because it is just clear budget support which is there. Now this is the Nifty IT. Now if you see here, this was the all-time high. It made in 2022, and from there it corrected to around 26,201 levels, where it made three bottoms. And I have been mentioning that it was at 78.6 retracement, so it had retraced up to those levels. Hence, the last week was again green. So the with the momentum in the US economy and all that, so our Indian IT should also perform well. So it should test their all-time high, uh, maybe in case in next few days. Now, the stronger among them is Infosys. So, if you see, I have been telling about this. It has had a breakout from the symmetrical triangle pattern, and the weekly chart. It is trading above all the moving averages, and it had a green week, and now it tested the 1700 levels. So, the last high was around 1900. So, let's see if it is able to reach those levels. Sorry. This is TCS. This is other major IT companies. It has been in this range of around 4,050 to around 2,900 for last 2 years or so. So it takes support at the lower levels and faces resistance at the top of the range. Now, last week was positive for it. So let's see if it can go higher from here. Uh, their performance is mediocre only, nothing great about it. The midcap index performed well last week. So it has been a constant high from March 23, and now it is clearly above the 20 EMA. So if you are here, just remain invested. Similarly, with the small cap index, it had two red weeks and went down, but then it made those hammer patterns. So that was a good sign. And then last week it had a green candle. So it made of all-time highs, and all the basically the mid small cap stocks performed well. Now, among them, the stronger one is Hind Copper. If you see here, it was generally around these levels, and then it has taken off last year, and now it touched 300 today, and it is in momentum now with higher volumes, though it is overbought, but it is expensive now. So keep a good stop loss, and then remain invested here. Maybe higher levels are possible. The other stock which looks good is Zomato. Now, if you see here, over a long time, it has made a rounding bottom pattern, and now it is above the all moving averages. Uh, I feel that it was facing a resistance around 140. So once it clears above that, trades above it for over 2 3 days, then it may test its all-time high of around 165 plus odd. So which should be decent target. Now I'll cover a few stocks today. First is Suzlon, all-time favorite of all retail, and I just wanted to, since I had mentioned that I will analyze this issue, so I'll cover this. It it is back in shape after a tumultuous period over the last decade. The company over the past 3 years has reduced its debt from rupees 12,000 crore in FY20 through various debt to equity conversions. With that, it has recently become net cash positive with a cash reserve of 700 crores as of December 23, after a successful equity raise of 2,000 crore in Q2 FY24 for debt reduction. The total order inflow in year-to-date FY24 is 2.9 gigawatt, and thus the order backlog stands at 3.1 gigawatt. Revenue for Q3 FY24 grew 7% year-on-year to 1550 crore, as wind turbine generator execution remained flat year-on-year at 170 megawatt. So just see here. 170 megawatt means they are roughly doing 600 megawatts per year of wind turbine generator execution. And the order book is 3.1 gigawatts, so that is roughly 5 years of order book. Now, wind turbine generator type order book is 75% 3 megawatt, and others are below 25%. So around 25%. So that is good. Now, Suzlon's entire quarterly profitability, I'll show you later, is driven by operation and maintenance segment. The wind turbine generator segment has a EBITDA break-even level of 600 megawatt per year and shall start contributing positively as execution picks up. So till 600 megawatt per year, it is not profitable only, and that was the reason why the stock went below or went into debt and huge losses. The medium to long term outlook for wind industry appear positive as 10 gigawatt of wind opportunities expected to be floated over FY23 to 27. So what they did was they did a QIP to raise 2,000 crore, retired that. We have covered about Q3 revenue. EBITDA was up 15% to 250 crore and profit up around 2.6 times to 200 crore. Order backlog I have covered. It is uh, t- uh, 5 times the trailing 12 months execution of around 600 megawatt. I'll show you finance costs they have reduced because the debt has reduced from to 14.3 crore versus 86.3 crore. Uh, So let's see now. This is their quarterly results. So if you see, this is in millions. This quarter they did around 1560 crores. The revenues are up Q on Q around 9.8% and year on year 7%. So roughly they are at the same levels. Interest outgo has reduced now from here 86.3 crores. It has become 14.3 crores. So that is good. Now this is profit after tax. From 78 crore, it has become 203 crores, which is very good. And EPS was 10 paisa. I'll tell you why EPS is 10 paisa also. Uh, so this order executed megawatt is the same. So there is no increase in the order execution, and this is the most important thing in any of these EPC players is the execution part, because order backlog means nothing. Now let's see the quarterly segment highlights. See, this is their growth of wind turbine generator growing around 14%, 7% year on year. Foundry and forging, there is a degrowth in Q3 FY24 as compared to last year and last quarter. Operation and maintenance is the strongest part, grew. Others, so that's why there was a revenue increase of around 8.5% year on year and 7%, sorry, 8.5% Q on Q and 7% year on year. Now, if you see here, it made a profit of around 60 crore. That's it. So the major part of the profit have come from operation and maintenance only. That is 200 odd crores out of the total profit. So wind turbine generator has just made 6 crore profit. So it has to go above that 600 megawatt per year capacity wind turbine generator performance so as to start generating the profit. So presently they are are surviving because of operation and maintenance only. Now let's see their balance sheet. It is very interesting to understand this. That when I said the EPS was zero point 0.1 with a profit of 203 crore, why it was so? It is because if you see here, their equity share capital is 2454 crore and the face value is 2. So roughly it is they have got 1227 crore shares. So that means if they roughly, let's say, they make 1225 crores of profit, then the EPS will be rupees 1. So this has to be understood. Now, if you see here, this is the balance sheet. Now this is the expected earnings. So, so if you see here, FY25, despite net sale of around 11,050 odd crores, they are likely to make around a 1372 crore profit. So it will, with the present equity base, it will amount to a EPS of around rupees 1 only for FY25. So if the EPS is 1 rupee for FY25, uh, and EBITDA margin growth and other growth is, uh, net sales growth is around 30 to 40%, giving them EPS of around, sorry, PE of around 50 should be okay. So that's why it is fully priced. For FY25 earning at 50 rupees, it is fully priced. So it can trade anytime, anything between 40 and rupees 50. And just for reference, uh, for FY25, Inox Wind's FY25 EPS is expected to be 13 rupees and Suzlon is 1 rupee. So you can judge for yourself that which is more expensive stock right now. Suzlon is already at 50p, and that Inox Wind is still, it's around 500 odd rupees stock. So it is still at 40 odd p. So that is the reason why, even if it is becoming profitable, it is not looking very attractive as a stock. Hence, it is not recommended to be bought now. And the other issue is that, as I have shown you, the quarter and quarter, the execution is flat. So if the execution is not going to improve much, then how do you give it a higher P? Now, this is the shareholding pattern. So if you see here, promoter shareholding has declined because they have been doing these QIPs. Institutional investors have increased. Mutual funds have also gone down. FIs have also gone down. Insurance companies have gone down, though FIs have increased here, and the retail has also, it's 62% now, but it is the maximum holder of Suzlon shares. This is the order inflow they have got. They got 2.9 gigawatt year to date in FY24 from various projects, so which is promising. Now, this is the chart of Suzlon. This is a daily chart. So, if you see here, it is trading now decently above the 20 EMA. It made a new all-time high of around 50 plus and has corrected below that. So, in my opinion, you must buy it around 20 or 50 EMA, because there has to be some margin of safety also. Because the rest everything is good, but it is just the large equity base and performance which is curbing their future growth. Next stock I'll cover again is a similar type of stock. This is IRB Infrastructure. Now, Q3 FY24 revenue and profit after tax were above estimates. In third quarter FY24, our IRB's private InvIT was awarded TOT 12 and TOT 13 projects in Madhya Pradesh and Rajasthan. What is TOT is toll operate transfer. So in toll operate transfer, the infrastructure is in place. That means the government has created the road, and then somebody is sold that project to collect toll fees and maintain it for say 30 years, and they operate and maintain the highway project for the entire duration. So they give one time payment and then they give yearly payments. So what the government is now doing is they are bunching up projects and calling it TOT 12 and TOT 13. So in that there are number of projects. So with these order wins, IRB's market share in the TOT space rose to 38%, the highest among any private players in the sector. IRB witnessed 25% year-on-year growth in toll collection driven by higher traffic and increased tariff. With a strong order book of 36,200 crore as of December 23 and a robust tender pipeline driven by BOT projects. BOT is build, operate and maintain for road, etc. Now here what happens is, the private player arranges all the finances for the project, and then makes the project and then collects toll and or gets annuity fees from the government for a particular duration. But this is a very very intensive issue, because here the private player or the person who is making the project has to arrange finances to build the project. IRB Infrastructure Trust successfully, that is their InvIT, they successfully concluded the debt refinancing for its five project SPVs totaling 6390 crore. So that is positive because that will reduce their debt burden. During the bidding process, IRB's priority is to focus on BOT projects, followed by TOT projects and then HAM projects. Now, I have discussed about TOT, that is Toll Operate Transfer, which is a established project. EPC is government players pays private players to lay the roads, that is engineering, procurement, and construction. BOT I have covered. In HAM, that is hybrid annuity model. Uh, Here, 40% is EPC and 60% is BOT. That means 40% of the funding is by the government and 60% of the funding has to be brought by the company. So 40% of the total cost is given by the NHAI in this case. Uh, so they are prioritizing on BOT projects because I think their funding is secured, and in BOT projects there are less people who are bidding for the projects. Now, this is their quarterly revenue. So, if you see here, uh, and this was the estimates. This is the estimate. So, it was higher than the estimate. Year on year change was 30%. EBITDA also grew 44%. But this is in millions. So, this is around 1968 crores. Uh, so, profit again improved. PAT was higher, 187 crore, higher than the projected, which was 179 CR. So year on year change was strong, around 32%. This is what is estimated for next year. So margins have was slightly improved from second quarter, but and better even from the third quarter last year. Now, for IRB, if you see the future, this is in billions. So in FY25, they are expected to do around 8,200 crores of sales and will have roughly 990 crores of profits and a EPS of 1.6 rupees. So at these EPS of 1.6 and 2026 around 2.2, so it will be somewhere between 1.6 and 2. And again now at 30p, around 60 is should be the fair value for this, though all other parameters are improving now. Their EV EBITDA is becoming lower, dividend yield is standard, their ROE is improving, ROC are improving, return ratios are improving. So that is good. Now here if you see their order book breakup, uh, operation and maintenance is highest, that is TOT, and EPC and bots are 21% of the total order book. So they are more interested in operation and maintenance and less in construction and EPC. Now, if you see, this is the EBITDA and EBITDA margin trends. They are constantly improving, and this is expected to remain at generally 45, 48 to 50 odd levels over the next 2, 3 years. Similarly, for PAT, it is also expected to grow at similar levels. So that way, it is positive. Now this is the chart. So if you see here, it after the results, since the results were ahead of expectations, so from around 48 odd levels, stock went up to around 68 levels. That is 20 rupees, and then is likely to correct now, because now it is fully priced. As I told you, 1.6 to 2 rupees over the next 1 or 2 years is expected to be the earnings. At 30 times it is fully expensive. It is also going up because there's momentum in the market. This is the daily chart. Last stock today I'll cover is Sun Pharma. It launched 28 new products during Q3 FY24 in India and has guided for strong momentum from in licensed products. Growth in US was on account of specialty business growth, including Illumia, Sequa, and Levulan. It launched three generic products in US on ex-tariff basis. It continues to invest in R&D pipeline for both global generics and specialty business. Sun Pharma has signed a definitive merger agreement with Taro to acquire the remaining stake for an agreed price of $43 per share. Taro is a Israeli-based company which basically makes pharma products in US, Canada, and Israel, basically in dermatology segment, various creams and lotions and all it makes. So Sun Pharma had acquired some majority stake in it few years back, and after that, now they are going to acquire complete stake. Over the last few years, Sun Pharma's dependency on US generics has reduced, and company's growth is more functional on specialty, rest of the world, and domestic pharma business that has strong growth visibility. So what they have done over the last few years is they have reduced their dependency on US generic business and moving on to higher margin business and domestic pharma business, which is less likely to get disrupted by US FDA inspections. Now, this is their quarterly results. So if you see here, Q3 was year on year showed 10 odd percent growth, and Q on Q it showed 1.5% growth. And EBITDA was up 11% year on year and 4% Q on Q. Profit was up 14% and 3% Q on Q. So performance is decent. Now, now if you see here, the breakup of the revenue breakup, now it has various verticals: India branded generics, US formulations, emerging markets, Western Europe and other markets, bulk drugs, etc. So if you see, there is a year-on-year growth in various aspects. Emerging markets was weak, while Western Europe, US formulations, and India was decent, and bulk drugs also went down. But the performance has been steady, and if you see overall, it is on a improving path only. Revenue mix, if you see here, so India branded generics is 31%, US formulations is 32, emerging markets 17, Western Europe 14, and bulk drugs and all 4.4%. So they have restructured their business now. Uh, if you see their future expectations, they are expected to do around 53,600 crores of sales in FY25. It is the largest in terms of market cap pharma company. Uh, and margins are going to remain steady, 25 to 28, 29%. PAT is going to be 11,000 crores with EPS of around 45, 46 to 55 over FY25, FY26. From here, they pay dividend, etc. And with this EPS of 45 to 55 and at 30p, they should be priced at around 1500 to 1650. So there is still scope uh, because they are showing growth in this. ROE is improving, ROC is also improving. PE is for FY25 is around 30 and 25 for FY26. R&D expense, R&D spends have remained accelerated, and as percentage of sales, they are around 7%. So they are spending on R&D, which is good. Now, if you see their chart, after the results, it has gone up, but it has still got some leeway as per the future earnings potential and all that. So on all dips, this should be added and all that because this is a safe stock and likely to do well with all their businesses performing, and now they are acquiring Taro and all that. So in specialty business and all that. So this is a good stock to have. I have finished now. We'll take questions from here.